Hello again, everybody. It's Harry Boxer, technical trader at thetechtrader.com. It is Tuesday night, November the 13th, and these are the charts for the day. I'm going to have some longs and shorts, but mostly on the short side. And I do want to emphasize that this is 1 week market. I don't see necessarily that we're at a low yet, although we're in a range and a zone where I am expecting some sort of better snapback move. But the overall trend is still down. I'm not seeing any major reasons for changing my focus, although if we do break in these zones, we could come down hard and fast into a big climax low. So either they rally from here or they're going to plunge and come down quite quickly with a very big oversold reading and a negative tick that could result in a rally of several days. We shall see. Starting off with Celsius, which had a nice day today. Take a look at the pattern. You'll see that since the March, April, May lows, when the stock was trading under $2, excuse me, it ran up into the nearly 4 range, came down in a parallel channel, and broke back out, reached all the way up to almost 6, 595 range, and then pulled back in a falling wedge. Now, so far, 1, 2, 3, 4 waves, and the fifth wave looks like it's starting, which could lead to a move all the way up towards 7 3/4 thereabout. That's my target for Celsius going forward. DMND, well, big move today for the stock, and if you can take a look, you'll see that this falling wedge over the last couple of months was broken with a huge pop today as the company released some financials and had a long conference call discussion about it. Apparently, investors liked it. It jumped 14.45%. That was up 258 on more than 1.25 million anyway, the biggest volume in months. Now, the way I look at this pattern, it looks like after a long decline and a bounce, it's stabilized and retested, and now may be able to get out if it can get across the 21 21.25 zone, which, if you can see, has been a resistance here since June. A move through that should get us up towards the mid-20s. Home Depot had a big move today, and after a big move this year, continues to press higher. Having already gone from the high 20s into the low 60s, stock, after consolidating here for the last 4 weeks, popped today, I believe, on earnings. Nice move. Didn't close at the high end of the range, but it did manage to close above resistance of 222 or 3.6% on 21 million shares. The volume, that was the heaviest volume I've seen on Home Depot going all the way back on an update anyway, since back in March. But we shall see if that means much. And if from the long-term standpoint, I put a swing trade on it today on the pullback, thinking we can get this up towards 69 or 70 up there. Our PRX may have begun to move today. We'll have to see. Here's your falling wedge of the last couple of months. And within the confines of this large rising channel, it looks beautiful. What I would expect after a 1, 2, 3, 4 wave move is a fifth wave that takes us up into the low 20s. That's a long way from here. And there is some resistance, of course, at around 1690, 95, which you'd have to get through first. Beyond that, secondary target up near 19. And then we'll see where we go from there. Today's volume, not particularly big, 265,000. But if you step back and look at the relative volume, you'll see it's the biggest volume in about 4 weeks. So perhaps it's the beginning of something. Keep close tabs on this one for you. Oculogics had a big pop, and if you take a look at the overall pattern, you'll see that after a big move from the end of, so let's call it November of 2011, stock moved from about the under $1 up to 4 3/4. Big move there. And then it spent the last several months consolidating, coiling, etc. Note that the April high and the October highs are being retested right now. And any move past the 465.70 area could spike the stock and run it up into the 6, 6.5, even 7 zone. Those are my targets for it going forward, but maybe even much higher on an intermediate to longer term basis. The natural gas stocks are still moving. Here's your rising channel on the UNG ETF for natural gas. And you can see how it popped, pull back, and popped and pull back. This time in a falling wedge, which broke today with a breakaway gap. You can see right there. Go open strong and closing to the upper end of the range, up $1.01 or 4.8%, 8.4 million traded, and that's the best up day since back here in about a month ago. So perhaps we're going to go up and retest. My target is about 23.40 short-term target, and we get through that. My swing trade target is closer to 26. Now let's move over to the short side for a minute and take a look at some of my favorite shorts at this point. Alphabetically, of course, as usual. Starting with ACTG. Incredibly, it continues to drop after multiple highs last year and this year. The stock came down, crushed in July, dropping from 40 down to 23.4 range. Created a rising wedge, which failed at resistance, rolled over to new lows, and then formed the bear wedge, which in the last week and a half has been broken. Look where we are, right on key resistance, support, excuse me. This goes back quite a ways. You take a look at the 2-day chart, you'll see that the 2011 February, March 2011 lows down here, and the low earlier this year, and the last couple lows, all in this range here. We crack here, we can see a precipitous fall that takes us down to the 16-17 range. Keep an eye on ACTG, looks very weak. And it's right on the precipice of a breakdown potentially. So we'll keep track of this one for you. But see that big vacuum here? We've had a 1, 2, 3, 4 wave movie, maybe in the beginning of 5th wave down. It could take us similarly to that, down in that range here. Athena Health looking quite negative, to say the least, and you can see that this stock has come down dramatically. With a big rollover and bounced off the trend line, but right now it's slipping beneath it. Today we're down another $1.17 or 2%, but more importantly, it closed near the low for the day, and the lowest level that Athena's closed since January of this year, so about a 10-month low. If the major channel is broken, and it appears it may be, we could see the stock run all the way down into the low to mid-40s. Buffalo Wild Wing continues to form a bear flag in here and acts quite poorly in my mind. And if this breaks here, we could see a quick test of 68.9, and below that is where it gets real dicey. You can see the major support zone going all the way back here about a year and a half. If they break that zone, this thing could really fall apart into the low to mid-50s. Conway trucking firm, after a little head and shoulders type top broke bear wedge, we put out a sell here, short, box of short, and rolled over. It got us a little bit of a trade. And in the last month, 6-5 weeks, it's formed a big bear flag, in my opinion. Today down 56 cents or 2%, but if it breaks that line, we can see it drop into the 24 range pretty quickly. Decker's Outdoor, what can I tell you? Probably the best short of the year. I just dropped from 118 down to the mid-20s and still, well, let's say high 20s, yeah, 28 or so. This stock shows no signs of forming a bottom in this area, and may even accelerate into a important low if it gets any worse than here. The technical support at the bottom of the channel indicates we could see it drop to 26.5, 7 range short term. Dollar General, another major retailer that's fallen apart, broke the major trend line, broke price support here, bounced off the bottom of the channel here, formed a wedge, and now it's breaking down. If it should take out this line, we can see a quick move into the low to mid-40s, perhaps even 41 or 2 quickly. IPHS, if you step back and look at the overall pattern, it looks like a massive top with a kind of a left shoulder head, right shoulder pattern. And this here troubles me. That looks like a bear wedge that broke down, bounced, and today reversed off of 47.25, closed at 46.10, down 76 cents. Now, there's only 50,000 traded, but you can see that the support zone in here, if taken out, could lead to a very quick decline down towards 39.40. Verifone, that's PAY, after rolling over hard early this year from the rising wedge. Another wedge here, another mini wedge there, and then a larger wedge here. You can see it's still in the downtrend. And it appears that if it does break and retest this low here near 27, it could crap out right down to the low 20s. Raven, forming a bear flag. After we put out a bear swing trade on the bear side here, around 30.5, the stock's come all the way down to 27, bounced and formed a bear flag here, which just appears to me that it has more downside room, maybe even to test 25 or as low as 22.5. TGH, massive topping perhaps. You can see where key support here is being tested. This falling little wedge to support, if broken, could trigger a nasty decline into the mid-20s. And lastly, today's TITN, TITN, which topped out here, broke down and snapped back, forming a big bear wedge in the last 2 months. If that bear or flag breaks down, look for a move to 16, 16.5. 17 at the very least. And there she goes for tonight. Good luck, everyone.